Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden secrets behind those dry corporate filings. And boy, do we have a juicy one today, a company that seems to be navigating a financial maze, and we're here to decode it for you. Let's dive into Yellowstone Group Ltd's latest report. This is a quarterly report, kind of like a company's midterm exam, and it gives us a peek at how they're doing financially in the very recent past. Before we jump into the nitty-gritty, if you like these kinds of straight-to-the-point financial breakdowns, make sure you are subscribed to the channel. And hey, we've got a growing community on Discord where we discuss these things further. The link is in the description below, so feel free to join the conversation. This report covers the period ending the 31st of December 2025. Essentially, it is a snapshot of Yellowstone Group Ltd's financial status and performance as the year wrapped up. Let's start by looking at the company's balance sheet. Think of this as a snapshot of what the company owns, what it owes, and the value left for its owners at a specific point in time. We're comparing the end of December 2025 with the end of March 2025. As of the end of December 2025, Yellowstone Group Ltd reported total assets of $54,192. Now compare that to just over $13,000 in March of the same year. That's a pretty significant jump in what the company possesses. On the other side of the equation, we have liabilities and stockholders' equity. Total liabilities at the end of December 2025 were just under $29,000, up from about $14,000 in March. This means their debts have also increased. Now, for the owner's stake, stockholders' equity swung from a negative $820 in March to a positive $25,375 by the end of December. This is a crucial positive change, suggesting the company's net worth has improved significantly, moving out of the red and into the black. Next up, let's look at the statement of operations. This tells us about the company's performance over a period, specifically its revenues and expenses, to see if it made a profit or a loss. We're looking at the 3 months ending December 2025 and comparing it to the same period in 2024, and also looking at the 9 months ending December 25. In the 3 months ending the 31st of December 2025, Yellowstone Group reported revenue of $11,000. This is a big change from zero revenue in the same period of 2024. For the first 9 months of 2025, revenue reached $29,667. Also up from zero in the prior year. This clearly indicates the company has started generating income from its services. However, the expenses are quite high. For the 3 months ending December 2025, total operating expenses were $25,996. This is significantly more than the revenue generated in that quarter, leading to a loss. For the 9-month period, operating expenses were $39,472, again exceeding revenue. As you can see, this led to a loss from operations. For the 3 months, the loss was nearly $15,000. For the 9 months, the loss was close to $10,000. So, while they are generating revenue, the costs to do so are currently higher. This statement details the company's net income or loss, plus any other income or losses that aren't part of the usual operations, like currency gains or losses. Essentially, it gives a broader picture of the change in the company's equity. For the periods ending the 31st of December 2025, we see comprehensive losses. For the 3-month period, it was a loss of $14,996. For the 9-month period, it was a loss of $9,805. This aligns with the operational losses we saw earlier, indicating no significant other comprehensive income or loss items to offset or worsen the situation. This statement is really important because it shows how the owner's stake in the company has changed over time. It tracks things like new stock issuance, profits or losses, and dividends. Looking at the start of this period, the 31st of March 2025, the company had a negative stockholders' equity of $820. By the 30th of September 2025, after accounting for some net profit in prior quarters, equity had grown to $40,371. A significant event here was the initial public offering where they issued new shares. This brought in $36,000, boosting their equity quite a bit. By the end of December 2025, after accounting for the net loss in that quarter, the total stockholders' equity stood at $25,375. So while it decreased from the September peak, it remained strongly positive, a big improvement from the start of the reporting period. Now, let's talk about cash flow. This is critical because a company can report profits on paper but still run out of cash if it is not managed well. This statement shows how cash moved in and out of the company from its operations, investments, and financing activities. For the 9 months ending the 31st of December 2025, Yellowstone Group generated $1,179 from its operating activities. This is a positive sign, meaning the core business is bringing in more cash than it is spending, despite the reported net loss. This suggests that some of the expenses might be non-cash items like depreciation, or that they are effectively managing their working capital. In terms of investing activities, the company used $579. This was for the purchase of plant and equipment. It's a relatively small amount, indicating they aren't making huge investments in long-term assets right now. On the financing side, they brought in $38,079. This came from $36,000 from issuing shares in their initial public offering, and $2,079 from related party loans. This influx of cash helped boost their overall cash position. The net result of all these activities is that their cash and cash equivalents increased significantly from $8,455 at the beginning of the period to $47,134 by the end of December 2025. This shows a healthy growth in their liquid assets, which is always a good sign for a company, especially at this stage. The notes to the financial statements are like the footnotes in a book, providing crucial details and explanations for what you see in the main statements. Yellowstone Group Ltd was incorporated in Nevada in July 2024 and is headquartered in Sydney, Australia. They offer financial consulting services to small Australian and New Zealand companies that are listed or looking to list on US OTC markets. Their specialization is preparing financial statements and reports. This context is important because it tells us their business model and target market. Here they outline how they prepare their financial statements using US generally accepted accounting principles, or US GAAP. They mention using estimates and assumptions, which is standard, but it also means actual results could differ. We see details on how they account for cash, receivables, and their property and equipment. Notably, under their accounting policies, they accrued an allowance for credit losses of nil for the 3 months ended the 31st of December 2025. This means they don't expect to lose any money from their current accounts receivable, which is good if true, but also something to watch. They also detail the useful lives for their plant and equipment, with computer and software and office furniture having a useful life of 3 years. This helps in calculating depreciation. This section breaks down their revenue streams. For the 9 months ending the 31st of December 2025, their revenue from financial consulting services was $29,667. This confirms our earlier observation that this is their primary source of income. This is a really critical note. For the 9 months ended the 31st of December 2025, a staggering 100% of the company's revenues came from just 3 customers. Customer A alone accounted for 56% of the revenue, and customer B for 35%. This is a huge concentration of risk. If even one of these major clients decides to leave, it could have a devastating impact on Yellowstone Group's financial health. They also have no accounts receivable from these key customers as of the 31st of December 2025, which is a bit unusual but might mean they collect payment upfront or very quickly. This is where management gives their perspective on the company's performance and outlook. They essentially explain the numbers we've just seen. They reiterate their business as a financial consulting service for small Australian and New Zealand companies. Their target clients are those with an annual turnover of less than $1 million USD. Management highlights the revenue generated and frankly admits that general and administrative expenses were higher, leading to net losses for the periods. They state these expenses were primarily bank charges and professional fees. They discuss their cash. As we saw in the cash flow statement, they had a positive net cash flow from operations, which they attribute to increases in prepayments, other payables, customer advances, and amounts due to a related party, and decreases in accounts payable. This positive operating cash flow is a good sign, especially considering the net loss. Good news here, they confirm they have no off-balance sheet arrangements, meaning all their financial commitments and obligations are reported on their balance sheet. This section is about the company's internal controls, the systems they have in place to ensure their financial reporting is accurate and reliable. They report that their chief executive officer concluded that their disclosure controls and procedures were not effective. They identify material weaknesses, including a lack of a functioning audit committee due to insufficient independent members, inadequate segregation of duties, and insufficient written policies and procedures. Management also concluded that their internal control over financial reporting were not effective as of the 31st of December 2025 due to these material weaknesses. This is a significant point. It means that while they are trying to be transparent, their internal systems for ensuring accuracy and compliance need substantial improvement. This could increase the risk of errors or misstatements in their financial reporting. The report also includes sections on legal proceedings, unregistered sales of equity securities, defaults upon senior securities, mine safety disclosures, and other information. For Yellowstone, it is noted that they are not currently involved in any significant legal proceedings, which is a positive. This lists the various documents attached to this report. This indicates that the principal executive officer has certified the accuracy of the financial disclosures. Finally, the signatures section confirms that the appropriate executives have signed off on this report, attesting to its contents. So, what is my take on Yellowstone Group Ltd's latest report? Well, it is a company in its very early stages, as evidenced by its incorporation in July 2024. The biggest positive is the generation of revenue and a strong increase in cash reserves, largely due to their initial public offering. Moving from a negative equity position to a positive one is also a significant achievement. However, there are some serious red flags. The nearly non-existent revenue in 2024 contrasts sharply with the revenue in 2025, suggesting a very recent ramp up. More concerning is the extreme concentration of revenue among just 3 customers. This makes them highly vulnerable to losing a major client, which could cripple their business overnight. Additionally, the repeated mention of material weaknesses in their internal controls and procedures is a serious concern. It suggests a lack of robust systems to ensure financial accuracy and compliance, which can lead to problems down the line. While they are growing and have improved their cash position, the business model heavily relies on a few clients, and their internal controls need significant attention. The path forward will depend on their ability to diversify their client base and strengthen their internal governance. They have potential, but the risks are very real and cannot be ignored. Alright, that is our breakdown of Yellowstone Group Ltd's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.